Good day, everyone. This is Gary Ender with the Shrewd Perspective, and it's a look at how to successfully maneuver through the market's mayhem and manipulations that we see every day. Today I'm going to take you through two recent trades, both Forex trades, one in the Euro and one in the Aussie. Let's start with the Aussie market. We see that this is the daily chart of the Aussie dollar. As we made a high here, we made a similar high. Price moves down, comes back up, and we see the failure to definitely come up to the high here. We see the failure by way of the shadow of this candle. That was also my entry where we see this blue arrow, and I came out actually on a stop loss as I was protecting my 100 pip profit. Let's take a closer look at the entry on this 60-minute chart. We see that this moves up. This is on the 18th. We see the failure here by way of this engulfing pattern. It moves back down. It comes back up to the upper Bollinger Band. Failed to make a new high. And as this price was getting rejected, I decided to take a short position. And this was really based on the price action that we saw just several hours earlier. And from this point, we see the market trailing off relatively well. If we come back to the exit point, remember the entry was right up in this area. As we move down, this is the 10-period exponential moving average. I wanted this market to stay underneath this. But I also knew that we had China data coming out that could affect this. I protected my 100 pip profit, which on a standard lot is a $1,000 profit, and I got taken out at the 301 level. All in all, I consider that an extremely successful trade. Next, we see the Euro trade where I sold short, where we see this purple arrow, and I came out where we see this lower purple arrow. Looking at the entry a little bit closer, we see how the Euro moved up. It just ran out of steam here. We see all these small travel days with the small candles. It moves up again. Price gets rejected up in here, and then there was plenty of time after this rejection, which was also a lower high, to take the trade, which indeed I did, and then we see this market trailing off nicely. I exited this at 29.37. This was the day or the morning of the FOMC meeting. I have seen and experienced so many times in the past that the FOMC can get in the way of your trade. I had 137 pip profit on this trade, so I decided to lock that in so that Ben Bernanke and gang didn't steal that really nice profit that I had. You know, this combined with the Aussie trade, 237 pips in just a few sessions, is a fantastic profit. And when you have profits like that, you want to lock them in, especially when we're going into something that's unsure territory like the FOMC meeting where anything can happen in the markets. Both of these trades, the Euro trade and the Aussie trade, were posted on the worksheet for the Shrewd Trader subscribers, giving them an opportunity to see the planning and the execution of these two trades and many others just like them. The Shrewd Trader feature gives these subscribers the opportunity to follow my trades. And you too can be a Shrewd subscriber, and I'll give you the opportunity at the end of this video. The whole goal is to stay on the right side of the market, which helps control your losses and bring in the profits. Good trading and be shrewd.